This video is not financial advice, for entertainment only. William Lee Bin, the founder of NIO, NYSE, NIO, said during the company's Q3 earnings call and made it clear that the company has no plans to raise additional funding in the short term to support NIO's growth. But less than a month, he ate his own words. Thursday evening, NIO announced plans to sell an additional 60 million American depository receipts, ADRs, which puts his integrity in doubt. Can we believe what he says in the future? Another disappointment is that NIO doesn't need to raise capital at this time. NIO has sufficient cash on hand right now. In April 2020, NIO raised RMB 7 billion with investors from Anhui province. In June 2020, NIO received $492 million in funding through the issuance of 72 million additional ADRs. In July 2020, NIO received a total of RMB 10.4 billion in bank credit from several Chinese banks. In August 2020, NIO received $1.73 billion in funding through the issuance of 88.5 million additional ADRs. NIO has raised more than RMB 32.8 billion, $5 billion in cumulative funding this year before the Thursday announcement. Between the stock sale in August and Thursday's closing price, NIO shares has rose 127%. But now with its competitors Li Auto, XPeng and Tesla started to issue additional shares, amid an explosion in stock prices of EV manufacturers, NIO was forced to change its mind. NIO joins its rivals and rush to offer more shares. NIO plans to sell 60 million ADRs, each representing one Class A ordinary share of the company. And NIO grants the underwriters in the ADRs offering a 30-day option to purchase up to an additional 9 million ADRs. NIO's share sale will be led by Morgan Stanley and China International Capital Corporation Hong Kong Securities Limited. Looks like electric car companies are selling more shares than cars at the end of 2020. There will be more shares outstanding, which means a dilution for existing shareholders. NIO has issued more than 10% of shares outstanding so far in 2020. Repeated stock sales can be a warning for investors. But the positive side is, the extra cash could help NIO grow by adding manufacturing and distribution capacity. Long-term investors would benefit from it. Chinese EV sales have accelerated in recent months as battery costs have fallen and the Chinese government has provided more stimulus to produce EVs in the country. EV makers in China have sold everything they built so far this year. NIO's fundamental has not changed, they continued their much higher sales. And shares have picked up more buy ratings from analysts since the August capital raise. 7 analysts, or about 47%, of those who cover the stock, rated shares buy in late August. Now 12 analysts, or 67%, rate shares buy. The average buy rating ratio for stocks in the Dow Jones Industrial Average is about 58%. NIO stock dropped to $41, down more than 8% following the announcement. Despite the momentary dips amid stock offerings, EV stocks are enjoying a 2020 stock surge. So far this year, Tesla stock has gained roughly 650%. NIO shares have increased more than 1,000%. XPeng shares have gained more than 111%. And Li Auto stock is up more than 97%. The S&P 500 index has gained only 13% so far this year, and plans to welcome Tesla into its ranks later this month. This is my analysis for NIO today. Please subscribe below in order to receive my daily analysis and findings. Thanks for watching.